Welcome to WCrypto.
Hello, my friends. Welcome back to WCrypto. Roughly 2 months ago, I made a video measuring Bitcoin and gold. Today, I want to revisit the topic, especially considering that Nick Szabo, a prominent member of the legendary Cypherpunks mailing list, recently shared a detailed analysis on it. Szabo contributed discussions there and proposed BitGold, a precursor to Bitcoin, back in 1998. Szabo's perspective gives us a fascinating way to understand digital asset and commodity cycles through the framework of sound money, focusing on gold rather than traditional fiat currency. This view matters for anyone studying how monetary policies and inflation distort real price signals. He argues that while many people fixate on new all-time highs measured in dollars, the true cycle tops of Bitcoin only become visible when you measure it in gold. Doing so removes the noise created by currency debasement and reveals the underlying cycle structure. According to Szabo, the most recent top in the Bitcoin to gold ratio appeared around New Year's 2025. The chart for Bitcoin to gold supports this thesis, showing Bitcoin reaching nearly 40 ounces of gold per coin around December 2024, followed by a significant pullback. Tracking price action in gold terms exposes the ongoing debasement of fiat money, which loses value across hard assets whenever monetary expansion accelerates. This isn't a new phenomenon. If we look back, both in 2020 and 2025, we can observe that gold's cycle peaks coincided closely with Bitcoin's relative cycle lows. Once gold topped out, Bitcoin began a strong period of outperformance, marking the transition into a new phase of the cycle. When the Bitcoin to gold ratio hit its local high, risk-averse behavior returned, leading to retracement phases. Szabo now estimates the potential bottom region for Bitcoin's valuation in gold to be around 23 ounces, plus or minus 4. Current data places the ratio near 25.2 ounces, suggesting that we might already be within that accumulation zone. The key takeaway is this: measuring Bitcoin's performance in gold terms, rather than in a constantly debasing currency, provides a clearer lens to understand true market positioning. It helps identify turning points, uncover long-term structural shifts, and separate genuine value trends from nominal distortions caused by inflation and central bank activity. This framework isn't just theory, it offers a valuable approach for studying macro liquidity cycles and long-term asset relationships. As these charts show, the interaction between Bitcoin and gold helps us grasp when markets transition from one phase to another, offering a deeper understanding of how value flows across sound assets over time. If he is right or wrong, only time will tell. It certainly is an interesting theory. I'll continue updating you daily. Join the free Discord for real-time market discussions. Leave a comment for the algorithm, it really helps. If you found value in this video, hit the like button, subscribe, and turn on the notification bell to stay updated. And see you in the next one.